Micron has completely changed and revolutionized their business in one key aspect. And really, Wall Street is ignoring this and not talking about it. In fact, they're talking about the other side of this equation. They're still saying that this part of Micron's business is still a major, major risk factor. And I want to explain to you why that is not so. Essentially, Wall Street is really lying to you. So before I get into this, please hit that like and that subscribe. Definitely hit that subscribe button. I'm building a Micron community here on my channel. So if you own Micron or any ETFs associated with that, also SK Hynix, anything having to do with AI memory, this is the place for you. So please hit that subscribe button and let's get into this. All right, so here's what I've got for you. Micron is changing their business with long-term contract deals. Okay, they have, and I'm going to come back to this in just a minute. They have put together 16 strategic customer agreements. And these 16 customer agreements currently right now represent over $100 billion in contract revenue through 2030. And it is these customer agreements, these 16 strategic deals, that are the beginning of how and when and why Micron is revolutionizing and changing their business. Why? Why is this happening? Because historically, okay, memory, specifically memory from companies like SK Hynix, Micron, Samsung, has been viewed as a commodity and has been very cyclical in nature. If you look at this middle column right here, long-term deals remove or change the cyclical nature of memory. On here on the left, you see the old cycle. Supply rises, customers stop buying, warehouses fill up, okay? Memory prices collapse, margins disappear. This is how it has gone historically. And this is the old line that Wall Street constantly falls back on, that analysts are constantly using. They're pulling out this old card and going, yeah, but memory is cyclical. No, it is not. It is changing. It is now. Is it 100% changed? Did the cyclical nature of memory been completely changed? No, it hasn't. But I will say this, for the next 3 to 6+ years, yes, the cyclical nature of AI memory, Micron's core business, is no longer as cyclical or kind of reliant on this old cycle that you see. Now they're on this, again, still in the middle column here, the new model with long-term deals. Customers reserve capacity years in advance. Demand is committed and harder to cancel. AI projects depend on receiving that memory, less risk of oversupply and price crashes doesn't happen. Stronger, more predictable margins. Those higher margins are driven from higher cost, and those higher margins drive what? They drive higher earnings. Those higher earnings drive what? Higher EPS, and ultimately higher stock price for you and I as Micron stockholders. Bottom line, okay? And this again is something that I firmly believe that Wall Street and a lot of people are missing because they keep going back. I keep seeing this time and time and time again, coming out in different, marketing notices, this talking head over on this financial channel or whatever. They're constantly dragging out this old narrative that the memory business is very cyclical. No, it is not. I am showing it to you here, okay? So look, why long-term deals are critical. Now moving to this left side over here, revenue becomes more predictable because here's the bottom line. Micron now controls the revenue cycle because they are locked up with these long-term contracts. Remember, 16 of them right now, total strategic value over 100 billion, 22 billion of customer cash already deposited. Companies like General Motors and Ford Motors already publicly named. We know that there are 4 very large hyperscalers in, but not been named. We know who a couple of them are when we can guess, but Micron has not named them. 3 medium-sized customers and 9 smaller automotive customers doing really, really well in the automotive sector. And again, I pulled this up because this was part of the announcement, but Micron and Ford signed that deal, and that deal is for Ford, similar to the deal that Micron signed with General Motors. You seeing a trend here? General Motors, Ford, obviously Micron is making major headways. And here's the other thing. Micron as a US-based company is getting these deals pretty much because they are a US-based company, right? SK Hynix, South Korea, Samsung, South Korea. So Micron stands alone getting these large deals from companies like GM and Ford, and we are going to see more of them. Why? Because these companies have to lock up memory and have these strategic customer agreements in place with companies like Micron, or with Micron really rather, because they have to lock in that memory because of why? The shortage. Bottom line, fabrication facilities from Micron, they just broke ground on a $9.3 billion fabrication facility in Japan. Micron did. These fabrication facilities are not even going to be coming online until 27 and 28. Okay. And then again, not all of them at one time. So these strategic deals, I mean, the revenue is there and will be recognized when they ship those chips. Who controls that? Micron does. What does that mean? They control revenue. They control revenue recognition along with the shipments of these, of their memory chips to their customers, right? And again, guys, this is something that I firmly believe that Wall Street is ignoring. They really are. I really fundamentally believe that. Because again, on the left-hand column, these long-term deals give less exposure to price crashes. Again, the deals completely kill the old cycle here in the middle column. And I really want you to kind of focus on that, because we've seen this time and time again. And that's why, Wall Street and the analysts keep talking about it. It was frequent boom and bust cycles. It was unpredictable earnings, lower investor confidence. Warehouses were full of the product. Prices crashed, all this kind of stuff. Margins disappeared. Ultimately, with margins disappearing, Micron and their competitors, SK, Samsung, they struggled with this. But again, the new model with long-term deals is changing the equation. And I really want you to get that. Okay. And no, I'm not trying to convince you to buy more Micron or anything like that. I'm just trying to make you understand, as I've been digging more and more into this, this is just a major aha moment that I have had of like, okay, I fundamentally get this. And most people are not getting it. And that's why I think it's very important for here. And this is the type of content videos I want to bring to you so that you understand just different aspects of Micron or SK Hynix or whatever it may be. You understand their business, right? You understand how it has changed. Okay. Because here's the other thing. Customer stickiness has increased with these long-term deals. These customers, they will not leave these deals because they can't. They need those memory chips. They do. Okay. AI customers think ahead. The hyperscalers, of which we know there are probably approximately 4 of them right here in the middle column. There are probably 4 very large hyperscalers that are in the obviously 16 strategic customer agreements that we've seen Micron sign already. They're not going to walk away from those contracts. Simply put, they're not going to. They cannot, because the hyperscalers, guys, you know what the deal is there? That's an arms race. The hyperscalers, it truly is an arms race. I'll take you back to the Cold War when the U.S. and Russia were literally stockpiling nuclear weapons. That was an arms race. Why is it relevant to kind of the memory discussion and the hyperscaler? Because in an arms race, whoever doesn't have as much as the competitor, they are viewed as a loser. And the hyperscalers simply cannot be viewed as losing the AI hyperscaler build out phase. They're not going to walk away, which brings us back to CapEx expenditures. Wall Street and financial analysts and all the talking heads out there, they love to drag out every single week that CapEx discussion. Oh, are CapEx dollars going to dry up? Are they going to go away? No, they're not, because the hyperscalers, always remember arms race, arms race, arms race. Okay. That's the key takeaway I want you to remember from that. And again, what's a core component of this as far as arms race? They can buy all the chips they want from AMD, NVIDIA, but if there's not a memory chip on those chips, obviously they're useless. They simply don't work. Okay. It is memory that drives the equation. It truly is. Once you understand semiconductor chip and how memory is used on that chip, as far as data and transfer and usage and all that kind of stuff, once you get it, you get it, right? And that's really the key here. All right. So I really want you to understand that this is huge. Okay. And that these 16 strategic customer agreements, nobody's really talking about it, but I wanted to bring it to you because I think that it is highly, highly relevant. Here's one thing it also does. Going back over to the left-hand column, Micron can invest with confidence. Micron is out there actually looking at, making strategic investments and acquisitions, obviously to maybe to shore up parts of their business. We saw one coming in from SK Hynix. They've made a strategic acquisition in the last couple of days, but Micron can do the same. And I'm sure that they are out there actively exploring it. Why? Because revenue is no longer the cyclical nature. They have high profit, high margin businesses that ultimately drives what? It drives profits. And those profits improve free cash flow, which they can then use if needed, obviously, to go out and invest with confidence. Micron, SK Hynix, Samsung all have better pricing power. None of them are going to lower their prices. And that's the other thing that you'll hear Wall Street talking about. Well, what if prices, fall? It's simply not going to do it. Between Micron, SK Hynix, and Samsung, they control 89 to 90% of the core memory, different components of the memory business. HBM, NAND, DRAM, all that kind of stuff. They control it. So they're not going to all of a sudden lower their prices. That is simply not going to happen. And Wall Street likes to talk about that. It's not going to happen because, again, with the shortfall for memory, guess what? They get to charge higher prices, and they all are. And you're seeing the pervasive effect of that, where now companies like Apple and things like that are coming out and saying that they're going to have to raise prices for certain product lines because specifically they are citing the price of memory and associated with that demand for memory and shortfall for the supply. All right. That's the key. Continuing on. Obviously, all this comes back to higher gross margins, still kind of on this left-hand column. Higher gross margins drive to higher earnings, higher prices, all those kind of things. They're all part of it. No longer we have really inventory risk because there simply is not inventory. They're literally shipping what they can when they manufacture it. I'll talk about this in a positive over here on the left-hand side, number 9. Wall Street does reward predictability, right? We know, and that's what I love about this going forward. Wall Street rewards predictability. What do we mean by this? The beauty of where we're at with Micron's business, okay, associated with the shortfall and their manufacturing cycles and bringing new fabrication facilities online is simply that as Micron delivers and ships those chips, they recognize that revenue. But guess what? They get to recognize that revenue how they see fit. Okay. They have publicly come out and said for even some of their larger strategic customers that they're only going to ship 50 to 75% of those orders, those strategic customer orders, going into 27 and 28. Okay. Again, they're going to ship those orders to supply and recognize revenue, manage margins, manage prices, manage supply. They're going to be doing all that and associated with that, with those cycles, right? And that's the key thing here. Okay. So again, I just want you to understand reduced cycles equal a stronger business. That is a theme that I've been talking to you about throughout this video, the reduced cyclical nature for Micron. And this is happening for SK Hynix as well. It's happening for Samsung as well. It equals a stronger business. It simply does. And as a Micron shareholder, I love this. Okay. And I really think you need to understand this is really what it comes down to as far as how we look at Micron's business. And truthfully, again, I'm not really seeing anybody really talking about this, which is why I wanted to talk about it. I thought this would be, important for you guys to know because long-term deals, they don't eliminate all cycles, but they do create a stronger, more resilient Micron built for the AI era. And it is setting them up in a very, very strong position. And as a Micron holder, I love this, which is why I'm adding to my Micron, my Micron holdings. Okay. And I just think you need to understand this. You need to know this, which is why, again, I wanted to kind of bring this to you. So ultimately, this drives to a stronger foundation for Micron, which with committed demand from large companies, $100 billion plus, as far as, locked in with these 16 deals. And by the way, we're going to have more of these deals. We are. I guarantee you Micron's going to make some announcements in their next earnings call associated with these deals. We're going to have higher margins, which equal better outcomes, healthier cash flow. With that cash flow, Micron can make really, really good decisions about how and where to invest that cash flow. And again, that gives them more predictable growth. And it does come back to a really simple thing. Wall Street does reward predictability. They really, really do. Okay. And that's what we need. We need a very predictable Micron business that on a go forward basis, as we roll into the next quarterly earnings and the ones beyond that, we're actually beating expectations. We're raising that forward looking guidance. And it's these customer service agreements that are a core cornerstone of that allow Micron to again, manage that cyclical nature, kind of change the cyclical nature of their business, because memory is no longer associated with the old cycle of memory, right? And that's in that middle column here on the red. It is simply not that type of business anymore. And Wall Street is trying to catch up and still hasn't caught up in how and what they're talking about this, because this is a truly key component that now you understand, and you can kind of look at this. And again, look, if you're looking to buy an SK Hynix on Friday when they come online, I think that this is something that's also part associated with their business, because the three big guys, Micron, SK Hynix, and Samsung, all stand there together. And we have historically been locked out of owning SK Hynix. I'll start covering SK Hynix as well if you want me to here on the channel, because it was a South Korean company. It was very hard to buy the stock and all that kind of stuff. And now you're going to be able to buy that stock here in the US. But that's the key I want you to understand, is that the business has changed. All right. So before I let you go, I always want to give you guys an opportunity to make even more money trading stocks. Here's one way you can do it. I have a trading indicator called X1 Algo. Spent over 30,000+ having the software developed. It's about $1.10 a day to use it. Here it is working right now. You can see working in real time. So the buy alert you see right here, and I'm sorry, that's a sell. That's a buy alert. My apologies. That's a sell alert. Okay, so you see that. So those buy alerts, buy to a sell, 48 days, 129%. But you can see all the way up to here in 91 days, Micron went up 231%. How would you like to know the perfect time to buy and sell Micron associated with its move up? All right, that's what the software tells you what to do. It tells you when to buy and when to sell. It actually sends you little alerts on their pop up on your phone, and it tells you when to buy and sell. You want to see it working for another one? Here's AMD right here. Similar deal. Kind of great looking chart AMD has. Buy all the way up to here, and you can see 95 days, 181%. To put this in perspective, $1,000 bought here and then bought and sold as the buy alerts came in and sell alerts came in would have made you $2,316 in profit beyond getting your $1,000 back. Okay, that's why the software works. And I'm asking you for about $1 a day. Oh, and by the way, there's a 30-day no questions asked money back refund guarantee. So essentially you get to try it for free, right? And if you don't like it, you get to cancel, get an instant refund. There's live coaching every week in the members area, and there's a private community, Discord community as well. So everything's here for you. Try something different if you want. I've got everything from teenagers to grandmas and grandpas using this every single day to know when to buy and sell stocks. And by the way, it does work for crypto as well, and know when to buy. And again, I'm going to leave you with, this is how it works. There's a link in the description below to get to this page. You pick the plan that's worth for you, monthly, quarterly. Again, you have zero risk because you are going to be protected by that 30-day no questions asked refund guarantee. So give it a try. Why not try something different? Okay. So thanks for giving me a few minutes. I will see you in the next video down the road. Micron is changing their business, and now you understand, and now you see why and how they're doing it. See you.